Welcome back, traders. Have a very short ICT lecture today, only about 7 minutes, so let's just get right into it. Link in the description, please like and subscribe.
Welcome back, folks. All right, so this is going to be a really brief review. All right, so we're looking at April 4th, 2025. This is NASDAQ. All right, so you'll see what these levels are in a moment. We have at 9:30 Eastern Time. Here's first presented fair value gap. After a high, runs short-term buy-side liquidity here. First presented fair value gap. When we're bearish, comes back up in, offers multiple opportunities to get short here. The very first one is this right here. Moves lower, back into it here, and at the end of the opening range, which is 30 minutes, 9:30 to 10 o'clock Eastern Time. During the 9:50 to 10:10 macro, all in here. Every one of these opportunities here gets short. Then we have this buy side and bounce side efficiency once price breaks away and through it. That's an inversion fair value gap, and it trades all the way down to my objective I gave you, which was 17,750 on NQ. And I mentioned that it could trade to 17,350, but I didn't feel it was going to do it yesterday. And you'll see that it got real close to it, but it didn't get there. So at the 10:50 to 11:10 macro, price rebounds right back up into that inversion fair value gap there and touches the high of the wick that I gave you as a discount rate to watch for targets basically on NQ on the daily chart. Market uses the inversion fair value gap here, breaks lower, trades down into the upper quadrant of the wick on the daily chart, which we'll see in a moment. It breaks lower, back down and went below 17,750, and we're in the lunch hour now. So it goes one more time, sweeps below the low, and then comes all the way back up into the 150 to 210 macro.
Pausing real quick just to say that I noticed he only talked about shorts. This is because the higher time frame is bearish, so you only want to focus and trade in that direction. Even though there are setups for longs, for example, a trade I executed on was here. We had taken sell side. There is a change to the state of delivery. Fair value gap came down, confirmation. Price went higher with another fair value gap. This would be the confirmation entry with your stop below the low. First partial above these relative equal highs. Second partial above this high. This is the obvious place for the morning buy stops. I was all out here because higher time frame is bearish, but if you could hold through this retracement back into this fair value gap, the final target would be this right here. But like I said, I would be all out once price poked above this high.
Now for the afternoon, I want you to look at it this way. We have 1:30, the opening range for the PM session, okay? But the first presented fair value gap in this run here, the first presented fair value gap, if you go through all this, watch, ready? That is too small and insignificant. Contrast that with this. See that right there? Much more prominent. And there's a volume imbalance right there. So if you take that and you add it to this candlestick's high and you drag it up into the volume imbalance and project that forward, you'll have the afternoon set up here going into the 3:15 to 3:45 macro. Remember, there's that 30-minute interval between 15 minutes after 3 Eastern Time to 3:45. Right there. Drag it over to 3:45. There it is. And there's your candle 3:45. Turning it consequent encroachment of that inversion fair value gap, which is the first presented fair value gap of the PM session opening range, which is 1:30 to 2 p.m. Eastern Time. Beautiful. Look at the body stopping inside of it. There. You're going to tell me there's no algorithm? You're telling me that's buying and selling pressure? I'm going to tell you you're full of grade A malarkey. And then back to consequent encroachment and sends it lower, trades down below 17,550. And the low comes in at 17,387 and a half. Right in there. It's beautiful. All right, so I'm going to take you up to the daily chart real quick. And that's these levels here on that wick. That's the upper quadrant, consequent encroachment, lower quadrant, and the low. All those levels here, you'll go back into the 1 minute chart I was just showing you, and all of that will make sense. This is the next draw on liquidity after we punch through this low. I personally think we're going to gap lower and be below this low on Sunday at 6 p.m. and then make a run below that low here. If it wants to go further, we have this low and this actual real liquidity void, which is a common gap. That's what a liquidity void is.
So this daily chart is the continuous contract. NQ1 exclamation mark. I uploaded my market outlook yesterday, and I too am looking for prices to go lower. And I specifically said in my video that I'm looking for price to go below this low, around 16,300 something. If you go look at the weekly chart, there will be a fair value gap just below this low, and it is the first discount fair value gap. So ICT and I are both looking for the same thing, and since I uploaded my video yesterday before ICT uploaded this video, there's no way I could have copied ICT. Unless he's secretly giving me information on the side. Wink wink. Anyways, that's it for this lecture. Very short, basically going through Friday's price action and letting you know what we're looking for in the near future. If you want more secret information like this, make sure to like this video and subscribe to my channel, and until I see you next time, safe trading.